Larry, how real is this threat? I look at Iran and I look at how glaring it would look to do something like this in the face of a military buildup. I guess it's distinctly possible, but what do you make of this and the effect it's going to have?
Yeah, well, what I make of it is that, we're up, what, 1.5% today on some really bad stories, some potentially bad news. I mean, 18.5 million barrels a day is run through the Strait of Hormuz every day. And if those stories were real, if they were credible, I think we'd be up a lot more than 1.5%. I mean, we basically just erased the last 3 days of losses, and we're basically slightly positive for the past 5 days. So maybe we're just drowning in stories and news flow. Who knows? And maybe it is real, but the fact that we're maybe compromising that strait, that's worrisome.
Yeah, I mean, obviously it affects a lot of oil. I believe, a third of the world's oil passes through there. So I understand the anxiety. But offsetting it, it's supposedly this China-U.S. trade tip that could turn into a war that we're told will slow the global economy down enough to cancel out whatever is going on in the Persian Gulf. It seems a little too neat packaged and tied in a bow for me, but your thoughts?
Yeah, I agree with you 100%. I look at oil prices. I look at the 10-year Treasury, not trading too far away from effective fund rates. I mean, I personally think that this trade tariff tension, this trade war is going to take a long time, and I think no one's going to be happy for a while. And if this thing was going to be resolved, I think we'd see oil prices in a different spot. We'd see 10-year yields somewhere else. The stock market, yeah, great. It's up 300 points today, but that's a bounce back from a lot of programmed trading yesterday.
You know what's interesting, even with the run-up today, since this trade tip, or whatever you want to call it, started, Larry, in the early part of last year, while we putting in a very good year today, double-digit advances in the major averages and the like, well off the December lows. The fact of the matter is, in that period of time, we've lost about 1,000 points on the Dow since this all started. I don't know if the two are connected, but what do you think of that?
I think they definitely are connected. I mean, a lot of talking heads continue to talk about earnings per share valuations, how the stock market's undervalued. I'm one of them, by the way. Right. But I also recognize that earnings per share, it's not written in stone. I mean, if this thing is protracted, if it continues to be a laborious project, yeah, 2020 earnings per share could drop. So maybe 28.50 in the S&P 500 is the new 29.50. I hope not. I don't think so. But it could be, because if revenues start to decline, guess what? That $181 per share that people are projecting for 2020 will go back to $168 a share, which was estimated back in the fourth quarter of 2018.
It's an interesting point. Larry, always good chatting.
Yeah.
Thank you, my friend.
Thank you.